All right, thank you and everyone for joining the Internet of Value Foundation New York, episode 185, the International Monetary Situation. I'll send some invites out. Welcome, Vet and Artillery. Thank you guys for joining the space so soon. And for all of those who get to join in the future, I hope you guys find this information as valuable as I know I do. Every single day I get to host these spaces and make the time frames and have the discussions with all of the great minds that we do in the community in the space and likewise in the distributed ledger technology community at a whole. But let me grab a clip. I'm trying to focus today more so on a specific panel that happened during the International Monetary Funds conference, which is happening today and still currently live. Welcome up, Shellfish.
Thank you, thank you.
Interestingly enough, it does not look like it's letting me post it to the top of the space. It's been doing that here and there. If you could, Shellfish, be so kind as to go to that. See if I can post it from
Do
here.
you want the one from the morning or the one from the afternoon session? Or
The
both?
the the future of finance one that I had just sent just maybe
Sure.
so an hour ago or so in the chat with Kristalina Georgina. Right, more so because the focus of this conversation with Jeremy Allaire as well, who was on the panel there speaking, definitely from a technological and innovative regulatory standpoint, but also talking, of course, from a stablecoin standpoint, and the focus of this conversation. Um, Other than the conversation about stablecoins, was more relative to the concept of tokenization and really a digital economy, right? The future of finance, right, will be digital. And to quote, of course, Kristalina Georgina, as she was on the panel as well, one of the things she said as well to you know the future of digitization and the digital future is that it's not about taking the slow approach anymore. It is here, and if you do not get on board with emphasis, you essentially will be left behind. The future is digital. Fiat money is moving digital. And I think Jeremy Allaire in the conversation makes a really interesting point where he brings up email. And to think when we speak about things like international payments today, I can send an email internationally. No one has conversations about international email. So how difficult could it be to make an international email? And his comparison was, one day payments will essentially be the same to the same likelihood, where you won't even think about it as something that was conceptually um, had friction behind the ability to make the action possible. Shellfish, please go ahead, jump in. And anybody else who wants to jump into the conversation, please feel free to do so.
Yeah, thanks for having me up, Dr. Nader. Yeah, they went into that, and they also compared it to the SMS testing fees and how once they got that situated, and people don't even realize that those fees were there a long time ago. And it'll be pretty much the same thing with like finance. Like those little fees that we used to incur will just kind of go to the wayside because of blockchain being so efficient and fast.
That's right. Kristalina seemed to really enjoy that analogy that Jeremy used there, right? You know, the the jump from SMS to WhatsApp, where billions of people who were paying fees through SMS no longer even knew what SMS was because everyone adopted WhatsApp. It was like something like 1.5 billion people, essentially over a couple months, had adopted WhatsApp. And now you have all these different services out there that provide the same exact thing, but of course, WhatsApp's still a very popular service. I really enjoy the approach that they had taken with it, where in past situations, especially like an IMF conference, where there has been a definitely a um, resistance to the thought of a Bitcoin or an Ethereum, right, or whatever sort of distributed ledger technology token that exists out there for countries to use or operate for whatever means they would. But today, there was definitely a changed approach in the stance of saying there is a larger means of wanting to create an interoperable standard where the representations of whether it's tokenized bank deposits, whether it's stable coins, whether it's CBDCs, can all intersect and interact. And even when there is places where there is somewhat displeasure with the thought of a CBDC or that word, that terminology, central bank digital currency, the actual added benefits that it might add, just from a monetary perspective, policy, and jurisdictional regulation perspective for a monetary bank, it might provide, for banks themselves, having nothing to do with citizens. So I think their approach is definitely notably changed and much more uh, encumbering into the digital future and preparing for what is going to be this tokenized representation of value that will be not only interoperable with all other tokenized representations of value, but able to be transferred between so-called operators in instantaneous means and matters. But don't let me monologue for too long. I mean, the panel discussion itself, I think it's a little bit over an hour long. It does, it does itself wonders. It's just great conversation. There's many great conversations going on in the IMF conference today. The whole focus on this digital future, tokenization, the different types of distributed ledger technology, interoperable systems that they've looked at. Not only the thought of a blockchain, but the means of being able to take these different types of systems from a database perspective and look at that as maybe more of a better means of operating than what is the traditional means today in server settings, the way that they operate, allowing for what would be this simplistic API call interoperability between systems. I think all of these things, they're very interesting, and of course, the the panel themselves, Jeremiah Lair, Kristalina Georgina, of course, the couple others that joined them up there, and the moderator, all do really a great job speaking about their not only their different thoughts and approaches towards how they're looking at things, but the means of the way that they see the future and regulate from a regulatory standpoint all the way to a technological standpoint turning out. Did you happen to watch the one above Shellfish?
I was at work listening and working at the same time. Want to participate more, but I'm actually getting on the interstate, so I'm gonna have to be in listening.
That's right. I know you were having some yummy ramen. Vet. Did you happen to get a glimpse at any of the IMF conversations today?
Yeah, not directly. I was reading the post I was watching um, the Larry Fink one interview. It's overall very interesting. Wasn't able to put my thoughts on the timeline yet completely, but it all makes it very clear that first of all, is here to stay. There's long term um, plays here, and people are positioning themselves. And so these things will take time, but it's very clear where they want to be. They want to be on chain. They want to use blockchain technology and cryptocurrencies. So this is for anyone who is already here a good sign, okay? And it is a very safe sign. So it's ironic to me when there are so many people who are still doubtful about crypto and blockchain adoption, right? And where we are at this whole thing. And Larry said, this is the beginning of token, the beginning. Okay. A beginning means it just is getting started. So calling a winner when the game started, like when it's like 1 minute in, is dangerous, right? Nobody calls a game 1 minute in, okay? Like you call when the game is over, okay? And that goes also to everybody who's like always saying, "Oh, there's like so many tokenization here. There's so much here." It's all so small in the grand scheme, and again, it just started. So for me, this is very good talk, and I like hearing that people are positioning themselves long term, and that should be a very good sign for everybody who's already here. Like, and once the game is over, we can draw winners and losers. We can see, okay, how much it who and what win and whatever. But they are coming, right? They are coming. They're making their first moves, and it's great to be positioned. It's great to be positioned in all aspects, whether you have stake in a network, whether you build something, whether you accumulate knowledge. This is a great position for everybody who's already in here, and a terrible position who is betting against it. Okay, if you are betting against this, you don't want to hear all of this. Like whatever, like all of the things that were said today, you don't want to hear that. Like you should absolutely hate today. Um, and yeah, the pain is to the upside. So the pain is not for the people. The pain is not for the people. Hey, if this is not going to work out, it's actually for a lot of these people. If it does work out, because way too many people have still not really comprehended that. So yeah, let's see. I don't know what you guys thoughts on that. I think you guys were following the live streams more closely.
Yeah, and I think that was a really funny way. That was a hilarious way to put it there. But I really enjoyed it. Right, like it's almost one way you could put it as similar to like how people say, if you think about AI, right? AI is the dumbest it'll ever be, as at right now, right? It's only right, like right now is like the smallest amount of things that are tokenized and represented in this tokenized format that is going to be like it's only going to grow, and the potential, the magnitude of it. Someone like Larry Fink literally saying over the next decade we're going to be focusing on digital assets instead of traditional assets. What is a traditional asset? What would you call a traditional asset? A bond? A traditional asset? A stock? Traditional asset? I mean, just that statement alone should make trembles, just like you had mentioned there, Vet, for anybody who sees this future not as a digital tokenized representation of an interoperable and or um, connected distributed system.
It also is traditional assets as stocks, bonds, obviously, real estate, maybe gold and silver. These things that are traditional asset classes are being expanded to digital assets, math-based currencies, as we say. And to be said, of course, Bitcoin, XRP, Ethereum, right? So like these tokens. particularly, and that is a very positive sign. You know, again, from them talking about this. And listen, these are the smart people. You know, the people who understand these things, even though they might don't say it. So watch their actions. Don't watch necessarily what they're saying. Okay, and if I'm looking, and when we have like these debates about XRP, the XRP ledger, the differences, and all this is to convince the stupid minds, okay? The smart minds will get behind it because it's logical, right? For example, Ripple controls 20, 30, 40%, or anyone controlling any supply on a network, okay, that has no proof of stake, right? It has nothing to do with the decentralization of the network. It doesn't hurt you if someone owns more of the native token, right, than you. A stupid mind, you need to convince them, right? You need to explain to them all back and forth, and you will lose them, along the way 20 times. It's tedious, and you're not moving the needle, right? Because they will never contribute to the network in any meaningful way to make up for it. But someone like BlackRock, right? You would not need to explain to them all of this. And the positive thing is they are able to move the needle. So when they will participate in the network, they can actually meaningfully contribute to it in a lot of ways. Okay, bringing liquidity, bringing customers, all of this. So the upside to convince smart people and smart entities is a lot more than someone who's not going to move the needle anyway. Yeah, like we have typically these conversations. So this is why it's very easy to just sit back essentially and let the facts speak for themselves. The smart people will easily be able to see through this, while the arguments that we typically have are not really moving the needle. It's more like for us. But I want really to encourage people to make that distinction between people who are able to make changes and people who are unfortunately not able to make these changes. And BlackRock and all these entities are. And in my opinion, also, it will all move into a stablecoin model. The stablecoin model is the following: these entities will mint these tokens wherever they want. Maybe they create their own chain, right? Like um, Circle does, and whatever. They create their own chains, but it will be interoperable with the rest of the crypto ecosystem. And then, like stablecoins, USDC doesn't exist only on one chain. Okay, USDC exists on all chains where it makes sense that it exists, right? And then distribution and liquidity makes liquidity and usage will determine distribution, right? So if there's a lot of usage, let's say on Ethereum, naturally these tokens will move there, right? So nobody's going to pick winners and losers in terms of a chain. Usage and liquidity and least amount of friction will do it automatically. So if you believe the XRP ledger is the least amount of friction, right, and is the best position to attract liquidity and usage, then you don't need to assume where BlackRock will tokenize, where all of these things will fall into place, because naturally they will gravitate towards it, right? And they can start their journey wherever they are, want them, their own chain, right? They can create their own chain, like Fish was saying in the comments, right? Fish said they're going to create their own chain, or they're going to start on Solana. It doesn't matter. Once on chain, these things distribute just like stablecoins, and then usage and liquidity over time, right? Do the distribution, okay? And least amount of friction. So this is the bet. Your bet is I want to be on the place where it's the least amount of friction, where I bet there will be the most amount of usage and liquidity, therefore. And because of whatever properties, we can talk about the incentive part of the chain, the consensus model, whatever you bring up, okay? All valid reasons. And then, you have these effects. It's actually very simple. It's actually very, very simple. But it needs time, it needs conviction, and unfortunately, many people neither have time really, and nor do they have real conviction. They want to get rich tomorrow, and so this is an opposite of that. And by the way, real quick, this is the one last thing. Just compare the time horizons between these entities and the average crypto investor. He's talking about decades, which means that their the clear future for them is blockchain technology, right? It's not a small. It's not a yeah. We're going to be in crypto for 2 years and then we hop on. It's like a short thing, like a one night stand type of action. No, they are seeing this is like the future. Okay, and so they're looking into this far ahead. Well, the crypto typical self-loader in our community, their time horizon is whether XRP is going to break $3 or $2, whatever. And this is so narrow-minded compared to what Larry brought out, and this is really refreshing. We don't often hear these long time horizon conversations, but it's very refreshing to see people with that time horizon versus the average crypto investor who's wondering if $3 is going to hold or not.
That's right. And you have to think, somebody like, CEO of BlackRock, right? Thinking about where they're going to be in a decade from now, and positioning themselves properly, they're most likely already positioned properly, right? And so the next decade is both but an expansion of that capability and grasp inside of the technology, right? And being able to, publicly um, allow for all of these different types of um, profit seeking applications that could be come from the technology itself, and themselves as well, utilizing it.
So
100%.
so before the IMF video you had sent over live feed, I was actually watching the D Wave with Alan. I can't remember his last name, and they were in Japan last week discussing the quantum computers. And I think things are going to move a lot quicker than people realize. The D Wave quantum computer currently has 4,400 qubits, and he said that they're getting ready to scale up to 100,000 qubits. Now, it's not with the it's with annealing. I don't know if I'm going to say it wrong. Compared to the other model that most people use, but the fact that they're able to scale it up, they're using smaller. Go. What did he? How did he say it? Anyway, I think you guys should look into it because the fact that they're going to be able to cut the electricity usage and GPU usage to scale really quick over the next few years is actually more realistic in what he was discussing than we even realized. Because I don't think they were expecting it to jump from 4,000 to 100,000 that quickly. And if they can jump that quickly to 100,000, imagine how fast it goes to like a million qubits, and connecting them through entanglement. It's going to be mind blowing how fast this stuff moves. So, and it was to secure the blockchains with a quantum hash rather than SHA-256. So it was all really cool. So you guys should check it out because I'm sure IBM has probably got their hands in something comparable. And yeah, it's very exciting.
For a lot of people, the job market sucks, right? A lot of the young people, they want more time to do what they like to do and not to live for work. There's a huge generational shift that is not compatible with reality. Rising inflation, living cost is requiring you to have a lot of money, right? And not to take so much time off. AI is coming for the jobs, right? Computing is getting faster and faster. And all of this is huge shifts, okay? Very large shifts over multiple decades that will just accelerate. And the effect of that is clearly that you can see in society. Okay, there's a huge issue with even like birth rate, because people are not getting to the point where they are feeling comfortable to have a family and so on. And there's a lot of problems, and digital assets in particular could be probably for a lot of folks that rock that is at least making that life better compared to those who haven't, right? Don't have these assets, okay, to protect themselves against all of these huge cyclical changes over these huge long time frames. And so I feel like that when you look at the digital asset ecosystem, when you look at crypto, that will be only just more and more popular over time. Just like the internet is more and more popular and will be more and more popular in the future and more embedded, money that is flowing over the internet will be exactly that, right? Money that moves over the internet and will be just as natural and as important as information is moving over the internet. So for a lot of people, it's literally that protection against all of these very harsh changes, harsh changes. And it's also basically people are rebelling against the old system through this, right? In just by investing in digital assets, shifting their money into these digital assets. And a lot of people did it in the past, the pioneers. If you look at Bitcoin, it becomes more and more mainstream, and then at some point it becomes super mainstream, where you got to have crypto. There's just no way around it.
5 to 10. Cookie, welcome up.
Hey Jeff, how we doing? This chat actually sends us quite nicely into a conversation I was having with Devon on Discord earlier. Apparently, yeah, you share some views that I do around solo techs. The latest crash on Friday really highlighted something, and that's that the digital asset space is just not ready to handle global finance on rails. It just can't do it. The arbitrage that was going on between different assets across different chains, different exchanges, it illustrated that there is so much more that needs to be done, which is why I think, when the IMF guys are saying that, it does need to be, it is the future, but I think that they know that it's many years off just because chains don't talk to each other properly. And if you're tokenizing assets on one chain and selling it on another, you need real time settlement and you need real time data feeds for the pricing, because the arbitrage that we saw going on chain within the crypto space alone, if that was happening on traded company stocks, you wouldn't have a functional ecosystem. Like the markets would not recover from it, which is why you have circuit breakers in traditional markets. You can't have decentralized and have circuit breakers. Those two do not go hand in hand. And that is the rub, is how do you push everything on chain but maintain the ability to influence the system and keep it sensible? Because continuity of markets is the regulators that work within each of the major governments, their main brief is maintaining some sensibility within the system, and you don't have that within crypto, as we've seen over the last sort of 72 hours.
The thing
Cookie, do
is
you?
not that we
Oh,
don't have it. We actually have it, but people don't want to use it or do it. Like all of the trading happens not by you writing on paper and going to the stock exchange. It happens online. So exchanges, TradFi is using the public internet to do these things, but it's guarded, right, and siloed to these exchanges, right? These exchanges can say, hey, circuit breaker 30%, and then they cut off, right? And you have no way really to trade it elsewhere if a lot of them cut the circuit breaker, because that's where the liquidity is. And that's where it's able to be traded. So when you think of features like permission domains and DEXs, which is not novel, like this is novel for the XRP ledger, other chains can do this with smart contracts. But the thing is, what is the upside to do this regulation if there is no one really asking for it? And if you look at Hyperliquid, no KYC, everybody can come and play. This is what people want right now. But if very legitimate players come into the ecosystem and create these exchanges and platforms and DeFi protocols, right, that are more regulated, where you need KYC to interact, where liquidity by big institutions and banks are provided only, right, to accredited investors or people who they know, KYC, AML, then now you have control on public decentralized chains, right? You can basically cut off. You can close the smart contract, make the circuit breakers into it, no problem. It doesn't affect, just like on the internet. If they close the stock exchange, the internet doesn't go down. They don't need to turn off the internet for it to take place. It's just that people don't want to have it right now. That's the thing, and it's maybe a sign that these big players are not here. Right? All what we have is pure public, no KYC trading, and what this leads to, we have seen. What happened over the past 72 hours. So unless these
Yeah.
people are not coming into the game, um, we will not have it. But it's possible. It's entirely possible. It's just by choice.
Well, I don't think it is possible right now, though. Like, you can't. And again, if you look at what happened, like there's from a technical standpoint, yes, in theory, it's possible that you could have a smart contract that could talk to multiple chains and execute in real time. Yes, the reality is blockchains 10 years away from that actually being a reality, because not all blockchains evolve at the same rate. And if you've got blockchains that have adoption and some that don't, then it just gets very, very messy. And the proof of that was what happened on the decks. And this is where it gets, in my mind, completely out of hand. So on Friday night, when I was sat there during the middle of that crash, the centralized exchanges which hold XRP, and let's remember the XRP never leaves the chain. They have XRP on chain. Those centralized exchanges were going all the way down to KuCoin, which I think hit $1.08. Majority of exchanges hit $1.21. The AMM on XRPL hit 198 and spiked to $3.20 within the same time frame because of the liquidity injection, some market bull. Those two figures were so grossly out of whack. And the reality is the centralized exchanges held the assets on the ledger. There's no written and proper data feed
But where's the
to
disconnect?
make it. But well, the disconnect is the price feed and the Oracle, like the way that Oracles feed the price feed in real time. You can't have. I was sat in Discord. I shouldn't be in a position whereby I can have a 20-minute conversation with some people about whether I should ARB XRP on chain because there's been a price spike in the AMM and it's not reflected elsewhere. That's not an efficient market, and there is no way that trad finance is gonna would tolerate that. If that had happened in a banking situation, the bank would be done for. And it's the same for the way that the perp trade platforms have worked. All of those perp trading platforms were trading insolvent during that period. All of them, because they all stopped. They stopped people out of trades that were to the short side. And those that were liquidated to the long side had their positions open even after their liquidation point.
A perp cannot go insolvent. That doesn't work.
The
It's just
business
one.
can. The business is back in the
No, no,
trade. So
it's a huge pile of
I
cash that it's just getting basically pushed around. People will automatically close their position because there was not much more to gain. Let's say you were shorting the market, okay? You shorted the market at the top. You got the heads up from Trump, okay? You shorted the market. At some point, you were automatically being closed. Your trade would be closed. Why? Because there's not much more to gain. For every long, there's a short to cover it. For every short, there is a long. But if those shorts getting closed because they're getting liquidated, what are you going to get gain? There's no more cash, right? So people were automatically, basically, their trades were closed. This is not that you are lost money. It's just money being shuffled around from one side to another, right? So if you're on the long side, on the short side, one side is going to get liquidated and you get the money from the other side. But if the whole side is getting liquidated, there's not much more to gain. So when people were shorting, right, all the longs were liquidated. Everybody was liquidated until there was no more longs. If there's no more longs, you as a short holder are not able to capture any more trades,
yeah,
any more upsides. So the platform is automatic closing you.
but it's not. This is my point. This is my point. They rely on the ADLs to close that. They act as their kind of
Correct.
quote unquote circuit breaker. I sat there and watched my Blowfin account because I was in a long position on Asta and wasn't anywhere near being able to close it. It put me something like 500% to the downside, like liquidated me 4 times over on that trade and showed that way. And it was like that for about an hour. Like that just shouldn't be happening. The money's there or it's not. The trade is open or it's not. And where the real issue lies is because these Oracle price feeds between exchanges, between each chain aren't accurate, aren't in real time, you can't trade efficiently. And institutional money, which is in the trillions, is not going to sort of sit on a chain whereby the price feed isn't reliable. They know that their Bloomberg terminals that they use to trade day in, day out, the price feed is absolutely reliable. And when it's not reliable because the market's completely out of sync or out of whack, the circuit breakers kick in that
No,
stops
this has
what you
something to do
saw.
with the volatility. If the volatility of an asset is so big, that is the natural cause. These volatilities don't exist in TradFi because they don't deal with the same assets. And if people are going to crypto and trade an asset that has a couple hundred million or a couple billion market cap, right, with so little liquidity, then volatility is just a natural cause. You cannot do anything with this. Like with the best Oracle solutions, this is just impossible, right? Because the volatility is just going to kill you on either side. So all these Oracle providers, specifically Chainlink, shout out to those folks, they do their best to get you the best possible, real to the truth, right? As they can. And not they do it over blockchain. This is why Chainlink is not a blockchain. That is all messaging data. They just capture from all blockchain and send this directly to you that you can capture what is going on. If they would rely on basically bridging that data over, I mean, no DeFi protocol would work. Liquidations need to happen immediately. This is why Hyperliquid works good, and other chains that do it very good work actually. Right? They can
That
liquidate. They liquidate a shit ton of money in seconds.
Yeah, because of the ADL, but that's on perp trading only. When you're trading stocks or any other, like where the majority of stuff is actually traded, it doesn't work because you need those circuit breakers in place and you need reliable circuit breakers in place, and they do not exist. There's no way you can, you're like, we're talking ledger close to ledger close because the differential on like a $1 billion trade, if you get price slippage on that because the data feed is inaccurate or out of sync, that's a real big problem for the majority of businesses. And we're not talking as well, like when we're talking about XRP tanking the way it did, XRP isn't a small asset, like 150, 160 billion. That is a massive asset, and it shouldn't be having those kind of
No,
price
no,
swings if we're a
you're
maturing
conflating
market.
market cap. You're
I'm
conflating
not
market cap with
conflating
liquidity.
it's
Liquidity is the
important.
part that is important, not the market cap. Let's be very clear.
and liquidity is held on the network. So these exchanges are very liquid, right?
Exactly. This is why when we have this ratio that we oftentimes are calculating, people have fun where they say, "Oh, 50 million, only 50 million in liquidity would how much push XRP's price, right? Or this much, how much would this push, XRP's price, given you freeze the order book, right? You look at how much is on the order book. That's only possible because actually all these cryptos are not that liquid, right? Bitcoin is the most liquid ones out there with the market cap that it has. But given the market caps that these chains have, it is not that big. Very little amount is actually pushing a lot of this XRP price. We were talking with Sugar. I remember that day very well when XRP went from 280 to 330 or something like this, where he came in and he's like, 220 or 30 million were just market bought on the exchange. 20 to 30 million dollars is pushing XRP that much high? Yes, because it's so illiquid actually. And this is why volatility, when you have these big cascading liquidations, is absolutely crazy. Like Jesus Christ, back and forth like ping pong. It was ping pong, right? We went to $1.20, $2, back to 140, $2. That's why so many people, even on the long side, were liquidated, even down there because they opened long positions and short positions. They were liquidated due to the ping pong. But it's actually really crazy when you look at how much liquidity is actually in the system.
Yeah, same thing happened to some people who were trying to catch, shorts on the
Well,
way down, right? The jump back up was also liquidating them.
Yes,
well, that wasn't one of the
completely.
problems that they cross collateralized, right? So even though a lot of these guys had these may have only been 2x because they cross collateralized with the shitcoin, it was illiquid. It basically it doubled the leverage and they got liquidated that way. Does that make sense?
That's on top, actually. A lot of people taking out loans against highly volatile assets. And when these volatile assets, as Cook was saying, right, going through the root, like left and right, and so much volatile, and it happens on multiple exchanges and chains, then arbitrageurs get to work to try to minimize it, capture, they take out profit in exchange for lowering the volatility. Then you have people who get liquidated, of course, right? Because their position is just underwater. Because if you have something like XRP, or even Ethereum or Solana, right? In these market conditions, when what happened, it is absolutely volatile, right? So if you even take something out against a meme coin, I mean, yeah, sure. I mean, we saw tokens like Atom go literally touching zero, right? It was literally touching close to that. I mean, who's going to take out a loan against something like this?
Hey,
So,
Vet, do we
yeah,
know if the price on the DEX did it go down that low? Do we know?
No, the Dex
The,
went to 198.
the
Okay.
Dex, the Dex didn't get these liquidations.
So what does that tell me? A, that there's not a lot of leverage being held on the chain, right? And B, that the chain has liquidity, but these exchanges don't.
Well,
well, the
the Dex actually
Exchanges?
hit three. The Dex actually hit $3.20 at the peak of the trough, if that makes sense. When everything was as red as it could possibly get, the Dex was showing at 3.20 because of the lack of on-chain liquidity, which kind of
Gotcha. Okay.
circles me to the
Right.
point is the lack of quality reporting between exchanges. If you had an efficient system, it would auto arbitrage between all of the centralized exchanges and you'd have a unified price. And that should be ledger close to ledger close in a proper system. We don't have that.
So what is this? Every time something like this happens, I always look at it from like a 50, 40,000 foot view. Like, what can we learn from the situation? And I think
well,
Friday we could learn a shitload, right? To me, it seemed like it was a stress test on all these exchanges for one. Number two,
Yes.
it taught us about responsible leveraging, right? And then on top of that, it
There's
shows
no
you.
such thing as responsible
Okay,
leverage.
all right, that's a good point. That's a good point. But one other thing, and then I'll land my plane. It also signals that we need a international standardization of data
well,
and the way that these networks communicate.
yeah, and not only that persistence between the discussion of Cookie and Vet, right? The observation to be had is, and especially in comparison to digital asset market to the traditional stock market, right? From a liquidity flux, there's a tremendous difference, right? And to Vet's point, if there was a influx in the amount of volume that was occurring from a liquidity transfer standpoint, these types of flows of the way that it moved may not even actually really be much possible to the point of its extent. And Cookie, information can only move so fast, right? And if there isn't a sufficient amount of liquidity, like there most likely is not on these exchanges, which are probably themselves over leveraged. This is something that this is the type of environment that we're definitely in, and
I
when
mean,
possible.
he has definitely a point with the interoperability. Like the better you have interoperability, the better traders can just work across different chains,
At,
and then arbitrage, right? So
at
you can arbitrage quicker and so on. Um,
well, to the
that is
point that
definitely
you
true.
guys both made, right? From a player like a BlackRock or a Fidelity, the means of having to move or wanting to move as fast as possible makes the most sense because of the worrisome of entering this market from a standards and liquidity from a standards perspective of regulatory means and a liquidity means, right? The thought of having all these traditional players move into the market, everyone's going to want to move at the same time, so that influx of liquidity and volume is there so that these things are much less of a worry. And so, I think the argument actually really may be so move as fast as possible because of that worrisome of one player entering the market and it being still somewhat distable and worrisome for that one single entity.
But this is, to be honest, this is really a problem, or you can be seen as a problem for native assets, less with issued assets actually, which the Black Rocks and so on are in. And I can tell you why. Let's take a very simple, because the issuer is the source of truth for the value. Okay, so let's say um, RLUSD or USDC, we can whatever stablecoin. A stablecoin has a value of $1. Okay, so that is what you should think, right? Is a value of $1. So if Ripple's RLUSD is trading for 80 cents on Ethereum, right? I don't need to know how much RLUSD is worth, right? Because I know it's a dollar worth and I can get it for 80 cents. So what I would do is the following: I buy it for 80 cents and then I redeem it with Ripple, right? For $1. So I made 20 cents profit. So my arbitrage is actually with the issuer. Or if I can find someone else who can redeem it with the issuer, I trade it with them. This is what most people do, right? Because they cannot redeem with Ripple, only institutions. So they are going to sell it to those people who can redeem it with Ripple, and they are going to basically get a dollar out, 20 cents profit. The opposite is, by the way, also true. If RLUSD is traded for a dollar 20 cents, so 20% above the value that Ripple is saying, it's a dollar stablecoin, then what people is going to do is they go actually to Ripple, mint RLUSD for a dollar, and sell it on the DEX for a dollar 20, right? So you as an arbitrager, you are arbitraging with the issuer by increasing buying or sell pressure until you find an equilibrium, which is like a dollar. So when someone is doing, let's say, an RWA, which is a treasury, you can do the same thing. If it's a real estate, you can do the same thing, right? You know what the value is. The issuer says, "Hey, this is the report. The property is worth $800,000, valued a week ago," and if for some reason that same property that is fractionalized, right, is traded for different prices on 3, 4 chains, then people are very easily can arbitrage it with the issuer, right? This is what people then do. But even that is actually not fast enough. And there's a huge problem with counterparty risk if those issuers cannot satisfy redemptions. This is why when you have these huge market turmoils and there is a DPEG or like volatility that is making this like huge deltas between the price, that these stablecoin issuers go out and give like always one-liners why they did well or bad. They say, hey, during this market stress or DPEG or whatever happened with, let's say, the stablecoin, we satisfied all redemptions. This is like always the flex. If they were able to satisfy all redemptions and mintings by customers, they did well, right? They did not fail. But what we have seen in the past, when there's like huge stress in the market, with let's say stablecoins, some issuers were not able to satisfy redemptions and mintings, and they halted them. And this is the break, right? This is then where it starts to break apart because you can now not arbitrage, and now you have the huge price differences. Now you have USDC worth 40 cents on one chain, 60 cents on another chain, and because nobody can actually arbitrage it. There is no way to arbitrage it.
And it destroys the credibility of the exchange as well, right?
Of the token of the issuer, the
Of
issuer,
the issue,
but
yeah, yeah, yeah,
yeah,
yeah, right.
but with a native token, this is the difficult part. There is no issuer. So it's the market price, right, that you are trying to arbitrage against. And
Well,
this is the difficult then. Because
this is
then you
my
have
argument.
oracles and shit like that.
The difference between XRP with a dollar sign in front of it and XRP on chain is the fact that XRP with a dollar sign is issued on an exchange as a financial asset, and the liquidity is and their liquidity will depend on their operations. So one of the problems that we ran into on Friday was all this liquidity was spread out between all these different exchanges, and a lot of these exchanges were illiquid. So I mean, I could be wrong, but that kind of what makes sense to me. Does that sound accurate?
I think the big problem with these exchanges was that you don't know about all the the liquidation stuff, right? You basically rely on their reporting, right, about the liquidation and how, when, under what circumstances. This is why like these chains like Hyperliquid are now running like these huge winning circles around Binance and jab at them because at each ledger close, right, you can see who got liquidated, under which circumstances, and why, right? Oh, he got liquidated because the price hit this and this and this. On these exchanges, you rely on them reporting. This is why people say the $2 billion that Binance is reporting is actually underreporting. They had way more liquidations that they are not publicizing for whatever reason. Um, and so if anything we learned from Friday is that decentralized technology, right, perform just better than centralized, right? Just it did perform better, and better in the terms of people had always access to the chain. That is fantastic. Nobody was stuck. Like literally, like a good friend of mine, Abner, like Goose, he just wanted to deposit some money to buy the dip on Coinbase. Frozen, right? Sorry, system is like overloaded. Please come later. What come later? I want to buy now. Huge issue.
Exactly. real
And
quick
then
before we
the
go to Shelly.
transparency part is also very
Oh, go
important.
ahead. Sorry. Go ahead.
I'm done.
Sorry. I didn't interrupt you. Okay. Go ahead, Shelly. My bad.
Can you guys hear me? Because I'm driving. It might go in and out. Can you hear me okay?
We
We
hear
can hear
you.
you.
So okay, cool. So this is kind of like the way it is with the New York Stock Exchange, right? Like the people got closer and closer to the exchange, the faster the transactions would enact, right? So I have a feeling like just the fact that we have the DEX, like anybody that has a DEX on chain is going to be golden. Like you don't want to have it off chain because you don't. I mean, even though yeah, you have ILP, you have all these things that can get you there. Why would you want to when you could have access to the DEX that's literally like seconds? Like, why would you want to go through like an Ethereum where you have to go have a smart contract and all that stuff? Wouldn't you want it? Wouldn't you rather have it everything already collateralized, everything already verified, the money's there, like ready to go, instead of going, oh, hold on, let me look at the contract, let me look at the stock, let me see if it actually has what it says it has. Like it's able to settle instantly because it's already been verified and just ready to go. Like
I,
I
I
think that's where it's going with like,
I agree with you,
right? Like
Shellfish.
where you see like all these, yeah.
I agree with you, Shellfish, but we have to keep one thing in mind. We have a lot of advantages that is important to people, clearly, else they wouldn't use DEX versus a SEX. But a DEX comes with its own downsides too, right? Like front running is a thing. There's a bunch of other stuff that is not always great. Let's keep. We always say this. There's nothing with only upsides. Everything has downsides. Everything. DEXs has downsides, and centralized exchanges have downsides, but they have also their own unique upsides. The interesting part is what is important to people seems to be the upside for decentralized exchanges, right? And that is the thing. It's not like DEX has no downside. It's the best thing possible. But the downsides of a decentralized exchange seems not to matter that much to people as compared to the upsides. This is why decentralized exchange is what people seems to flock to, right? They like it, and they like the accessibility, they like the transparency, they just like it more. And specifically after Friday, where a lot of people had maybe not so great experiences with centralized exchanges, they seem to prefer that. But if you ask someone who says, "Hey, I want a customer support" or something like this, well, a decentralized exchange in its raw form has no customer support. The on ramp is maybe also more easier with a centralized exchange. So all upsides and downsides, but overall, if you look what performed good in the eyes of the public and what was important for them, the decentralized exchanges did fairly well, right? Did really fairly well. Whereby decentralized exchange, I thought would have handled it better, but it seems like they had their own issues on Friday.
Yeah, XRPL in particular, just lack of liquidity, which is nuts for a
Yes,
top tier L1. I think that's what Shelley was probably talking about more so was like a native DEX rather than a DEX overlay. Um, it got me looking. I've been doing some digging now as well. So the RLUSD XRP pair is really really interesting. Um, I'm looking at the order book in real time, and I'm seeing Bybit currently pinching both sides of the order book with fairly large buys consistently to try and stabilize price. One of their main wallets just seems to be opening up very, very large buy and sell orders with a very small spread. So we have got some market making going on by exchanges on the pair, but it doesn't get you away from the fact that just the biggest, well, what should be the biggest pair on our AMM is still only 1.5 million XRP of liquidity.
I agree. This should be our like really goal. This is why I said this in the other space. We need to figure out how we can bootstrap the XRP Ledger DEX liquidity. This should be like really our priority, and we should use like all efforts that gets us further. It doesn't mean we go from 0 to 100, but when we look back a month, 2 or 3, right, we should always be able to say, okay, we are a bit better than then, a bit better than then. So accumulate the wins there, so that we can bootstrap the DEX.
Can the exchange again? It's always puzzled me that exchanges don't necessarily hold LP positions on the deck. So, like, if you've got an XRP USDC pool on your exchange, it makes sense to actually hold it on the DEX because it actually gives you the opportunity to snipe on ledger close, potentially take some ARB opportunity, but also to earn AMM fees. So, No, they can incentivize people to deposit to them, redeposit themselves, put that in an AMM, and then feed back the yield. And the nice thing about it is they don't have to worry about it when it's on chain because from the custody perspective, it
I
makes
agree.
so much more sense to do that, and it makes it way more efficient.
I agree. I think the move for a centralized exchange should be how can I integrate as much as possible with with the decentralized exchange and share the liquidity, contribute to the liquidity, be reflexive, right? Like I contribute to the liquidity pool, the liquidity contributes back to me because I can grab. So it's reflexive. It's like back and forth. And you can see this like with Binance and Aster and like all of these bigger centralized exchanges. They realize the power of decentralized exchanges. I wish we would see this from these smaller ones too, because they literally have like we would have all the support on the XRP. Like as you said, Bitrue, would be maybe something they could use it. They have all the integrations. Jump in, contribute your liquidity. It would help them too back and make them a profit, as you said. So I wonder what that the issue is. Is it maybe they don't see it? Is it technical reasons? Is it you know? I don't know. It should be an obvious one to me at least.
I think, it's the business model also maybe a little bit. Instead of
Yeah.
thinking like a fintech, they think more like an exchange, right? Just, I want this soloed off walled garden where I essentially can just charge as many fees as I can get out of people.
I was talking with this with Dennis. Like we had dinner. It was actually really, really fun, and we talked about this. And the thing is, we have a Dex that is amazing. Okay, yeah, it was the first Dex, right? Before Dex was even a term. It aggregates liquidity. It's a layer one integration. The thing though is, and remember, we always say that nothing has only upsides. Everything has also downsides. So you would think, what is the downside of this actually? We always pitch like the great things about it. What is the downside? The downside is if you are a project, a business, whatever, okay, it is very hard to bootstrap on the XRP Ledger DEX because you cannot guard liquidity, right? To the point of view where you said the business model. So I give you an example. Analyst Finance, I think they worked a lot with Axelar to get MXRP. Okay, this Midas XRP, whoever wants that. So they worked a lot. It was really fantastic. They did some information pieces, retweet back and forth. So clearly they did a lot of effort. So once Midas XRP came to the XRPL, it was accessible everywhere. You can buy it on First Ledger, you can buy it on XP Market, you can buy it from Zaman. People can even buy them without using any of these interfaces with their script. So this is great for the user, right? In terms of hey, I can choose, I can do whatever. This is just bad for the people who put in the work, to get these things in because people can just circumvent them. Okay, from a business model. So the incentive is not really aligned with people to put in the work. If well, I can just go around it. Imagine they were able to onboard them to a smart contract or whatever way they could guard the liquidity on their Anados DEX, right, or platform on the XRPL. Well, everybody who wanted to have at least meet us XRP in the first maybe day or two, let's say 48 hours promotion, need to go to Anados. Alone, the volume there would probably have made them enough money. Looking at how popular Midas was in the first 48 hours would make them enough money to sustain the whole year. They could hire people, they could like do all of this with their effort that they put in, rightfully so. You can't do it actually on the XRP ledger, and that is a big problem. Smart contracts would be able to do this, right? Smart contracts would be able to say, hey, if you put in the work, you onboard users, you onboard liquidity, you collaborate with other projects, you can guard that liquidity, monetize it, and circle back to your users, right? You know who your users are, and you know they used you, right? Not someone else as a platform to use the DEX. And so you can reward them, you can incentivize them. And that is that point that, in my opinion, is the maker and breaker for bootstrapping the XRP Ledger DEX, right? Because I was talking with Adam a lot about this, and it was a space, and he was clearly also very fan with like let's say permission domain decks goes into that direction, but smart contract would actually really help bootstrap the XRP Ledger DEX liquidity. And now the following. Once we have the XRP Ledger DEX bootstrapped, okay, once it is bootstrapped, once there is, let's say, all of this volume, all of this activity, all of those assets on, then the layer one implementation really plays out, okay? But it can run without those guarded liquidities on top, okay? You need sometimes to do the counterintuitive to achieve what you actually want. And we have seen this also with the XRP ledger as a network in itself. Okay, when the XRP ledger, decentralized ledger, launched, only Ripple was running validators. So they first then were, okay, how can we get more people to run, right? Of course, there's no incentive, as we know. So they paid universities to run validators, right? They paid universities to run validators and so forth until there were more people who started to run also validators to the point that Ripple can actually close their validator and all of those universities can also close their validator and the XRP ledger would run. So they bootstrapped the XRP ledger decentralization successfully by doing the counterintuitive, paying other people to run in the first place. So we need to do the same thing, doing it counterintuitive to the layer one DEX. Actually, not aggregate, but segregate liquidity to achieve what we actually want. It sounds weird, but I strongly believe that will help tremendously. Okay, and I hope we can sooner than later get smart contracts. I talked to Dennis, as I said, and he said it's almost as ready to get like a DevNet going, so we can actually have full smart contracts on the XRP ledger and on DevNet and play around with it. And my hope is we can get it sooner than later, so we can actually bootstrap the XRP ledger DEX.
I wouldn't want that for MXRP though. I understand where you're coming from. Like, there's a monetization piece there for the ones that need monetizing, which is those that produce the interfaces that allow us to interact with the ledger. But that's a cost that should be borne by Midas and Axelar ultimately, because they're the ones that are making the biggest amount of money out of the transaction by enabling them to access MXRP on chain, Anados, Magnetic, First Ledger. Ultimately, like First Ledger's got swap fees built in. That's great. Magnetic doesn't. No, Anados has certain fees built in, but probably does need to bring some fees in for it. So their fee structure is one, or just having a commercial agreement with those guys at Axelar to say, well, look, actually, we enabled this. It's got momentum because of what we did, and having a commercial agreement in place whereby some of the yield that Midas produces can get linked back to them. And again, it's all evidentiable who is accessing your platform to do it. Because it actually, if I'm Midas, I don't want people redeeming with me because I don't want the I don't want the ag of dealing with and like money laundering and doing checks. If someone just buys MXRP on the DEX and sells it on the DEX, I don't have to worry about anything. I'm not identifying that wallet. They're not redeeming via me. They're redeeming via the pool that I produce, and I've got my fees intrinsic to it. So actually, I want to be incentivizing those DEX skin providers that give a nice clean interface and allow us to interact with that token. I want to be giving them a kickback for doing that because it's less work and it's cheaper for me to pay them for that than it is for my compliance suite to do AML checks on everyone.
You there, Vet? He may have stepped away for a moment. You know, I know like and Vet definitely has likes the terminology smart contract, and for all intended purposes they are very, at least the way that it's been um so far approached, um like a smart contract, or like the capabilities of some of the logic flows that could be done are very similar to like an EVM smart contract. I like to think of it more as a programmability standard that could be coming to the XRP ledger, where the capability to have the same type of logic flows be accessed like there is in a smart contract, except be something that's utilizing all of the capabilities that the layer one has, plus some extra logic that could be, added into that metadata for a execution to be done from a payment standpoint. But I also really like the approach so far, where the thoughts and in capabilities of limiting the damage that it can do or be done to the ledger is in the forefront of that programmability standard. And of course, if you haven't gotten a chance to check it out, Cookie, um, top off my head, I think it's XLS 101. That if you're back, you probably know better off the top of your
Yeah, it's
head.
Exodus 101.
Yeah, awesome. And so if you could check it out and give it a give it a look through, and if you haven't already, maybe then give some thoughts.
Yeah, smart contracts, by the way, have like right now have multiple. There's multiple things that give it a lot of tailwind. Okay, so this is why it will come. Okay, in my opinion, it will come, and specifically how it's done is also, in my opinion, in a good way and not harmful. Right? There's a lot of mechanisms in place with the fees to control it in case there would be something. But we need to have like these two things in mind. Okay. First, we talked about the bootstrapping liquidity. I think this is very important because not only for the DEX, but for actually for all amendments that we pass. Okay, think of DID, credentials, multi-purpose tokens. A lot of amendments that we are passing um, need to get. We want to have them usage, but it sometimes just doesn't fit quite what people are looking for, and then they cannot make use of it. Smart contracts help to close the gap, right, between what you actually want to do and what we can offer. Um, so for the bootstrapping, in my opinion, is super important. This is something for the guardian liquidity. Something that took number one place, in my opinion, is security. So you would think smart contracts not brings not so much security to the network. Actually, it brings a lot of security to the network. Okay, and it brings now more security to the network for one reason. We are able to do these features in a smart contract and not via an amendment in the first place. Okay, so the order should be do smart contract version, right, to the feature in smart contract. If it's super popular, then we can take some time and make it layer one. Okay, but the go-to should be make a smart contract. Okay, not um, make an amendment because we are forking the XRP ledger currently every 3 4 months. This is not sustainable with the amount of features that we want to have. If we say no features, we cut now, no features anymore, no amendments, zero, then okay, then smart contracts loses that security benefit because there's no. If we say we want more features in the future and for anything that comes along, then at this point we need smart contracts because we are truly risking the XRP ledger to make a huge mistake that can cost us the whole network. One good example actually for this is you can read it actually also up, and this is thank God it's all caught and it's not activated. But there's an amendment called permission delegation. Okay, it's up for voting right now, but it's actually deprecated. Okay, and there's a blog post on xrpl.org that you can read about why it was deprecated. There was a bug found in this one, and this is a very devastating bug. Okay, the bug that was found there is if it went live, that anybody could burn anyone's XRP. You heard right. Okay. This is crazy. Okay. If this went through, if this would have been going through, we were done. Like scrap the XRP ledger. We done with this. Okay. This is why I turned not decreasing, incredible bitter towards amendments in the last couple weeks or days, mainly because of it. And you cannot blame anyone for it because the thing is, engineers, software, there are bugs. And we cannot expect people to make no mistakes. Okay? So bugs are a natural thing to happen. So how can we deal with this? Knowing that these things can happen. Are we going to test our luck like we did here? Or are we going to say, hey, maybe we should sacrifice a little bit, of resources that we have on the ledger and get smart contracts and implement features through smart contracts so we don't sacrifice the layer one and we don't need to fork every 3 4 months. Okay, this is my path. This is why I'm an incredible smart contract maxi currently for the XRPL, because I cannot think what would have happened if this one went through, right? If this one went through, I mean, the thing is also we would probably need to roll back the ledger, right? We exchanges would be like having huge trouble. Like, how are you going to account for that? So legal problems. It's a huge issue, okay? And it just should show us that these things are always there. So when we cheer for an amendment or whatever, you could just wish basically the most harmful thing actually to come to the lecture right now, because we don't know. Okay, so again, smart contracts for me has these two aspects: security and the bootstrapping of the XRP ledger, aka innovation. So innovation and security is taking, in my opinion, right now the spot for smart contracts. And I don't want to fork anymore. I don't want to have more amendments. I'm actually really I'm good. Okay. I don't want to have more amendments. Whatever we have right now, yeah, let's get them passed and hope all is good. But I just don't want to happen, because I don't want to deal with any of these, of any whatever would happen. Because I mean, how can we get out of these things if they would happen? Okay, so anyway, long story short, um, yeah.
So Vet,
It
what's the
is
difference
but it's
between
an
a smart
interesting
contract?
perspective.
Oh, sorry, go ahead.
No, go ahead, persistence.
It sounds like an
Nobody's talking.
amendment is just a form of smart contract. Correct me if I'm wrong.
Sorry, can you repeat that?
It sounds like an amendment is just a form of smart contract, right? Like, what's the
Yeah,
difference? I guess is my
Dennis would
question.
probably agree with you if you would see the basically it as a whole XRP ledger as a smart contract.
As a smart,
It
yeah,
Yeah, he made that analogy, but it's basically an implementation into the blockchain in itself. So a smart contract is running on top of the blockchain, right? And you need to interact with that blockchain, while the um, amendment is basically built into the protocol. So you make a protocol change. A smart contract is not a protocol change. An amendment is a protocol change, and a protocol change comes with a different downside, as we say. It has upsides, but everything is downside. We just established that everything is downside, upsides. The the upsides are is that everybody knows what it does, right? It's built into it. So you know exactly what an NFT is on the XRPL. There's not 20, 40 implementations of it. Um, and it's also very easy, just an API call. So there's a lot of ease of use, security that you would get if everything is right, right? The problem is, though, if you have an issue with these amendments, everybody is affected. A smart contract, if it has an issue, only that smart contract is affected, right? Let's say I built a smart contract and it has a bug. Well, my smart contract sucks. So you would just avoid my smart contract, use Death Rangers. But if it's built into the blockchain, are you going to avoid the XRPL, right? Difficult, And so it's like a different approach to these, and one has a lot of benefits. The other one has also a lot of benefits, and they are more complementary. This is why I would like for us to go first the smart contract route. If this feature turns out to be super popular, then we can take our time to build it into the XRPL, right? Slowly over time, no rush, because hey, we have it already as a smart contract. But if our only mechanism to introduce new things is through amendments, then we are forced, right? Let's say we want NFTs. Well, there's no other way than an amendment, right? We don't have smart contracts. So, and if there's no even pressure of, like, hey, let's get it passed, because, there's a lot of business use cases, now you are in this dilemma of speed versus security on a layer one.
And then with the amendment of permission domains, will I be able to have my own smart contracts within that domain that no one else can access? I guess.
no, with the amendment, permission domains has been deprecated. What Vet's saying is what is in the amendment of permission domains, what that logic flow is going to allow to be done, could be written into a smart contract. And
Yeah.
if, just in case, there was such a devastating bug that was found in the reason for this amendment being deprecated right now,
Permission
ha-
delegation, by the way, not them. Yeah.
sorry, permission delegation.
Yeah.
It would be minimized, right? The amount of damage that would be done would have been minimized. It would be to the smart contract and to the those who use that smart contract, right? And so, yeah, it's a really interesting point, Ben.
Yeah.
We also have two people who have come up recently who haven't gotten to speak yet. Crypto Beast 808, welcome up, man. Always glad to have you here, and I've gotten to hear you speak in a while. And Devon as well, welcome up.
The one is just farming. I think you can actually make some room up here.
No, I'm not farming. I was actually trying to catch up on the entire conversation. It pivoted like right at the end of the previous one, so it was kind of hard for me to catch up. But I did want to speak on the circuit breaker conversation. Me and Cookie was actually talking about that kind of earlier. I didn't get a chance. I did want to hear other people's opinion on that because I think that was a pretty good point that kind of got overlooked. If we're going to go into a tokenized future, how do you guys feel about that point that he brought up with the circuit breakers, specifically vetting their friends? But anybody, please answer.
I didn't get the question you just mentioned, but what up everybody? Oh, I like what you're saying, Vet, because that's something I have mentioned in the earlier days about smart contract layer as a security layer for amendments, to where the smart contract layer will take all the risk that some amendments could bring in, such as how you were speaking about, on many different levels, even with bugs in that came in through the AMMs. The 14D situation could have been better. I mean, all the smart contract layers. Some people did do studies on other networks showed should have showcased the security level issues that it caught during the process of the smart contract. Even just having a legit way, or I should say a better way to allow people to create smart contracts on at an amendment level would be a good level to have it, so where it has a layer of where there's a concrete level to where everybody can start off from, and grow from there. Like how you're saying, added in as a smart contract, and if it's something that is very detrimental and needed for the layer itself, added in as an amendment, which would actually help in the amendment process as well, because it would bring about debugging issues that would not have been seen unless it's live. You know what I mean? So there's a lot of things on that, having programmability, that I was very bullish for a very long time, about these things. And slowly but surely we'll get to the level where we needed, for the future, like how you were saying, Devon. As we get into the future of tokenization and all of that, without certain programmability, we'll never be able to scale to the levels needed for platforms to create a safer layer for things to evolve and scale up to. But yeah, man, good stuff. And it's been a while. Yeah, it's been a while. We've been
100%.
battling a lot. But yeah,
No,
good to see
uh,
everybody.
yeah, no, thanks for speaking. I mean, you brought so many things now on my radar as well. When I think of the thing is, before it was like, okay, how many amendments going are we going to need? Maybe people just, oh, just maybe these two, and then it's okay. But these amendments are keep coming, and the thing is, it's okay because people actually want to like have features on the ledger. The problem is our only mechanism is through amendments, and this cannot be right. Every time to do a protocol change, like basically a fork, right? Like, oh, update please here because you get amendment law, and to this point where we now have to say, hey, actually, having smart contracts is the defense play, right? And not having smart contracts is actually the attack play because we are forking the ledger constantly, and this is not right anymore. And I mean, look, the lending protocol is a good example. Lending protocol is, I think, close to 35,000 lines of code. I mean, 30, this is crazy. Just after learning about these other things is it's just not okay. Like we should not be able to do these changes anymore. Like this is just way too much. While I think the Dennis did a lending protocol with smart contract. I think he did it with Fuchs though. Took him a day or so, and he did like an AMM or lending protocol, something like this. And if there would be an issue with that one, would be just only on this smart contract. The chain would be okay. I mean, you mentioned the AMM. To be honest, this was like embarrassing, right? Like me having to go around and tell people, please don't use the AMM, like don't use the chain. Like, where are we? That I need to go around and tell people, please don't use the chain because it has a bug. Like, what? Yeah, this shouldn't be a thing. Like, if a project has an issue with a smart contract, don't use the project, right? Use XYZ. But telling people, hey, by the way, don't use the chain because this AMM thing has a bug. Wait until there's a fix for it. Um, should be should it was the first warning, and more are coming. Right, like we get more and more of these warnings, specifically with this permission delegation one. For me, this was a deciding factor. I was like, no, I'm done with it. Like I don't want to have any of these anymore. We need to have a change. This is a clear warning that we are playing with our luck. It was just by coincidence it was caught. It was coincidence it was caught. If it went through, I mean, I don't want to know what would have happened, right? And permission
Yeah.
delegation is a small one compared to these others. So
And it was up for vote.
it was up for vote. Yeah, it was up for vote. Yeah. That's why you saw like an immediate deep dive in uh, people pulling their votes, because once this was known, people immediately pulled out because yeah, if this went through, problem. And how would you even explain something like this, right? Like I was thinking to myself, imagine this would have gone through, someone had attacked and burned people's XRP. Why would I even tell people? Like
Yeah,
why
I
would
was
I
gonna say
go
there's
in?
only so much damage control that could be done.
Yeah, like what would I even tell people? Oh, sorry, like there's a bug, and we need to roll back the chain. What would I even
Yeah,
tell
we broke,
people?
we broke, we broke it. Yeah.
It's like it's so embarrassing. It was like, nah, dude, I'm not gonna. No, this is not ridiculous. This is ridiculous.
Persistence, you got your hand up. I'm gonna probably close
Yeah,
up in the next couple minutes as well, but please go ahead.
sounds good. I wanted to take a shot at Devon's question about the circuit breakers, but first I want to say, hearing Vet not change his thesis, but pivot on what he thinks is best for the chain on top of having David step away a week or two ago, I think is just super super bullish, and I think that it means that we're getting close. But back to the circuit breakers, I think
You want first to
you
take a
know
shot at Devon. You haven't shot yet.
well, that's what I'm doing right now. I don't want to take a shot at him. I want to take a shot at this question.
Oh, okay.
So
Oh,
the way I look at the circuit breakers is that maybe people think that these circuit breakers are meant to save the people, but they're not. They're meant to save the exchanges, right? Because so when a circuit breaker gets tripped, it usually means that they're either too illiquid to continue operations, or there's some kind of problem on the back end that we don't know about. So, but one of the problems with Friday, my thesis is that there was so much liquidity spread out through all these exchanges that's why they started failing. And one solution to having not really needing circuit breakers is concentrated liquidity on the dexes through you know um, making these liquidity pools more liquid, and using the dex as compared to using these centralized exchanges, which really just care about their bottom line. They don't really care about the end user. I'm the reason. That's the reason why I'm here. When Robinhood closed trading on AMC, I got so fucking frustrated. I just left. I exited all my positions in equities, and I went to gold and silver. Thank God.
But
But like,
real quick to interject, how do you
yeah.
realistically concentrate the liquidity towards these decentralized dexes? Then on top of that, how do we get regulators to agree, which we don't want regulators to pick and choose winners and
Well,
losers, but we would have to get regulators to agree on which dexes would ultimately be the ones that they
well,
concentrate liquidity to
I think
list
the
on.
XRPL has been built to regulate itself, right, through protocols. And I think that the liquidity alone on the DEX will prevent these large, you know, losses or gains. The liquidity on the DEX will create a more stable environment, which will actually, make it harder for these things to happen, in my opinion. And I guess one question I have for Vet and whoever can answer is, when we see when transactions start going in real time, and settlement is instant, and all these things are brought into the open, right? So transparency is real. Do you see an ability for people to short the markets anymore, or do you see that as kind of like a practice that's going to go away because it's going to be much harder to do? Just curious to hear what you guys think.
I'm thinking that would still always be around, the ability to short the market, because in essence, what allows that ability to
Right, the
happen.
ability,
Yeah,
absolutely, the
just like
ability.
leveraging what happened on Friday. People were trading, looking at leveraging and stuff like that. While where the leverage contracts and all that are from exchanges, and you are 100% correct on that circuit breaker analogy. I like that analogy because it does protect the exchanges that allows that leverage to hold. But then the users themselves just lose what they ante up, and that's what many kind of don't really aim at. It's like you only lose what you leverage, just like what you leverage yourself in the markets. And at the end of the day, in my opinion, the individual themselves has the ability already to see these things at scale and using the ledger and the knowledge of the ledger and understanding the different dynamics of concentrated liquidity, artificial liquidity. I mean, Kirk, that guy that does that XP market, that he has been actually sharing some quite interesting metrics that I have been vocal about for a very long time about certain accounts being made and stuff like that, where smart contracts can actually help mitigate that for projects and creators to not allow certain things happen with certain bot accounts or where wallets are created and concentrated in a certain area where we can see that on Ledger. Everything is there in the open, but then the ability to kind of gather them together is not there. That's why I was kind of happy when I seen I forgot who mentioned it, but you mentioned it too. That a forensic analysis kind of implementation for the XRP, which there is none. But there is some people out there that does it for a living, analyzes blockchain networks and stuff like that, which I do, and XRP both. King, I forget where he is. Man, I missed some of his talks with him. He was a good guy to talk with cybersecurity stuff. But all of these things, just like how liquidity and all these things happen behind the scenes with sexes, dexes, and blockchain bring all that out in a transparent, immutable sense. So seeing how things be implemented and policy implemented is where we will kind of see how things will move forward, which we do see a little bit. But yeah, it's going to be hard for regulators to come into the space because they're going to lose a lot of control of a lot of things without them understanding how to use it. That's just my opinion.
Yeah, I think it's really interesting, and to your point, I think if we get programmability, when we get programmability on the XRP ledger, the amount of things that people will then take and do with that, like creating some sort of way to stop spam bots or these very minuscule amounts of payments that people are sending out as
I mean,
advertisements.
like when AMM pools and that launch, how liquidity was being manipulated was the same exact way how people were farming for airdrops, tokens, and all that. It's just done in a different way, and it's quite interesting because of programmability not being there to not allow that to happen on that level where it should be. People is gaming the mechanics, and the person I'm alluding to was vocal about that. Was very vocal about really gaming the mechanics. And it's not their fault, but like, in actual sense it is because you're showing your moralities and who you are as a true person. That you're gaming these mechanics even though you know it's not the right thing to do. And that's mind blowing. But yeah, without programmability, we allow these things to happen at that level.
Yeah, and it's really hard for me to see past Vet's point about you know the amendments being something that it's always been a very overwhelming thing, right? Why we've always moved so slow here in the XRP ledger in the community because amendments were essentially able to be breaking of the network, and to be this close to and have so many recent little mishaps and things that could have been catastrophic. It really does. It makes a lot of sense, Vet.
Yeah, and
And to persistence. Sorry, Vet.
that,
And to persistence. I was actually very It made me happy hearing you, Vet, talk about programmability more because you remember our earlier talks, man. It wasn't all too pretty.
yeah, to your point, Death Ranger, this is why like in general like amendment voting is getting slower because just people the appetite is really disappearing for a lot of folks as these things are coming up. Plus, a lot of people on the UNL um, they have also their livelihood depend on the ledger, right? Think of XRP Labs, think of BitHomp, XRP Scan. There's a lot of projects who really depend on the XRP ledger. for their business and to feed their families, and they really care, right? For them, an operational and functioning XRP ledger is crucial. Okay, they're not only token investors, which is, in my opinion, even higher quality in the sense that there is an urgency for the chain to always run flawlessly. Okay, um, and so therefore you can see that with the votings, in my opinion, there is a huge fatigue, just also with that. And I think an awesome goal would be literally to have, like, if we get to a point where we have 1 year, no amendments, honestly, I would celebrate that because that means we found a different way to introduce features and do things without changing the protocol each time, and can really fully focus on building, right? And have people like see do great stuff instead of like, oh, vote here, update here, new Ripple D version here, that. We did this right the past couple years. You guys know the drill. This was our life all here on the ledger, voting, amendment, next, these and these. Um, I think we really ripe for a new chapter here, and we might be able to get to that one without any issues, right? Very close call, but hope hope it works out. But anyway, the thing is, there's tremendous amount of potential in the XRPL, and if I look at specifically not only the community, I see a top chain, like we are top three, five chain, and there is a ton of things that are super hard to get for a lot of people who have everything else, right? There's a lot of chains that have everything, right? Let's say they have all the tech, maybe they have whatever partners and so on, but these ground things that are super hard for engineer to accomplish, like if you are a developer, you cannot just spawn a community, right? You can just not spawn liquidity. You cannot just spawn all these things. It's just very hard and frustrating for a lot of folks. Understandable. We have them. So we just need this other part to get done, right? With the bootstrapping of the liquidity in the DEX. And then honestly, we will plow through so much if we just get this other part going. And I'm very confident that we will achieve it. I'm very confident. We have the right people. We have great people. Um, and I hope we can just follow through on this, and then we have a crescendo with what's going on. So overall, very optimistic, of course. But I'm very optimistic, aware though of the challenges, right? That's the thing. I'm aware of the challenges, but I'm optimistic despite those because I think we have all the right tools and the right people to accomplish them.
I love it. On that note, I think we're going to end right here. That crescendo it is. I really appreciate everybody who came to the space today and everybody who comes and listens to this in the future. This was it was information packed. Everybody came up, bringing
Real quick, Def,
great vibes, persistence. Go ahead, jump right in.
if you don't mind, sorry, I posted a post from Saul that I saw earlier today that I thought was very interesting. He said, the challenge, hide a public network from people while maintaining its publicity. And I think that where we are now and where we were years ago, we have done that tenfold. Well, we collectively, as a
It's still
community.
though, like this is such a good post, by the way, because if you talk to other people from other chains, some people don't even think XRP has its own blockchain. They think, I don't know what they think, but it's crazy that we have a blockchain in the top five, right? That it's hidden from the public, right? It's public.
It's a mature
It's
network
even a
that
it's even a popular public blockchain. I would add this on top what Saul said. It's a popular public blockchain, but still it's hidden, which is so weird. You cannot find this in the top 10. Like any other chain, is not a hidden on the XRP ledger. So it's you know it's a mysterium.
bullish. Hey, thank you so much, guys. That was a great space. Thank you, Deb. Thank you, Deb.
That's it.
Appreciate you guys.
It's the hidden gem, just like all of you guys in this space.
And short silver and gold.
Love everybody. I
Well
hope everybody
said, Matt.
has a great rest of the night.
Later, guys.
Night, everybody.